Hello, everyone. So we all know financial advisors and institutions act primarily in their best interest, not yours, and they take a relatively large portion of your investments and fees, no matter how the investments perform. So if you understand your investments, and even better if you can invest for yourself, the difference in the long-term returns can be astronomical. So today we're going to explain to you a simple option strategy you can use called writing a put, and this can provide income with minimal risk. So first of all, as with any strategy, you need to pick an appropriate stock. In this case, it needs to be a stock that you would like to own, but maybe is a little too expensive, or you don't have the money to buy it right now. So for our example, we've chosen Canadian Utilities, CU, on the TSX in Toronto. So this is our real-time screener we use, and this shows us all different criteria about various stocks. We have all the different sectors and over 250 stocks screened. And here in the utilities and power supply sector, we see that Canadian Utilities is trading at a price of $35.31, which is 25% off the 52-week high and less than 2% off the 52-week lows. So it's trading near the bottom of its range with a PE around 15, a beta that's one of the smallest you'll ever see at 0.09. And a main thing for us that we always look for is a decent dividend yield, 3.34%, which only amounts to a 50% payout of their earnings. So looking at all these metrics, Canadian Utilities looks like a great stock to buy. It's one we've been monitoring for a while, and we think now may be a good time to enter. However, we have many issues right now. As you know, we've got Greece, US Fed rate hikes, China, all kinds of unknowns that could affect markets significantly. CU in particular has been hit fundamentally because of the prospective interest rate hikes. However, we think that in Canada, rate increases are not on the immediate horizon, and returning to a normal rate environment is going to be a long, gradual process. So we're not too worried about Canadian Utilities having much downside from here, but we do see some potential upside. Okay, so here now we have to look at an option chain. So what an option chain is it shows all of the bid and ask for various strike prices. You have to pick a date, so we've chosen August 21st, 2015, and we're looking at a put. So we're going to look over here on the put side, and we're going to look at $34. So it's a strike price right below what the stock's currently trading at. This red line means the stock is trading right here at $35.40. So we're going to look at the strike price just below it. So at $34, we're willing to buy this stock. We know Canadian Utilities is a good stock based on the metrics we looked at. And if we look here, 3.34% dividend yield, low PE, earnings per share, plenty to cover the dividend, all the stuff that we just looked at in our screener, the stock looks attractive. So we're willing to buy it, but not quite sure if we want to buy it at these levels. So again, we're going to look at the $34 strike price because we're willing to buy it at this price, at $34. So what we're going to do is we're going to write a put or sell a put right in here, hopefully down the middle, maybe 40 cents. And someone's going to pay us 40 cents for each share in order to have the right to make us buy the stock at $34. Now, why would they want to do that? They want to do that as a hedge, as some protection. Maybe they own the stock and they think, well, I don't want it to go down to $30, so I'm going to pay someone to take the stock off my hands if it drops below 34. Now, we don't own the stock, so we're happy to buy it at 34 if it gets to that level. So we're happy to take this person's money if they're willing to give it to us. And if the stock drops to 34, we'll gladly take it. So now we'll look at an options calculator that we've created. So all these calculators are available for subscribers to our website, Day Trade Canada. And you can also get more information if you want to tweet at us at Day Trade Canada, and we'll gladly help you out. And you can also book one-on-one sessions if desired to get any kind of investment advice, tips, or education that you may require. So for this example here, Canadian Utilities, again, trading around the $35, 30 cent, 40 cent level right now, 35.32. We're going to choose a quantity of 300 shares. So generally, we're comfortable with $10,000 blocks with any of our trades. You may be comfortable with more, less. That's up to you. With a quantity of 300, that would amount to a cost of just over $10,000. So that means on August 21st, if the price of Canadian Utilities drops below $34, we're willing to buy the stock. That means we have to have the $10,000 on August 21st to buy the stock. Now, this $34 strike price is 3.7% below the current price. So that means the stock has to drop 3.7% in order for our option to be worth anything on August 21st. If it stays above $34, we collect this 40 cents, which amounts to $111 revenue as our premium. So if the stock trades above $34 on August 21st or up until August 21st, we collect this revenue, no questions asked, no money down, no risk to us. That's about 1.1% of what it would have cost us to buy the stock at $34. And that's subtracting the premium. Now, why would we get excited over 1.1%? We generally don't. However, this is 1.1% in only 2 months. If this was an annualized return, no, we would definitely not do a trade like this. But this is 1.1% for only 2 months. That means annualized, that's 6.6%. That's a little more appealing to any investor. And we add to that, there's no upfront cost to this strategy. So that's the best advantage here. We maybe don't have the money right now to buy a Canadian Utilities or to buy any stock for that matter. Maybe we're fully invested in the markets, or maybe we don't want to put more money into the markets right now because they're uncertain. We can do a strategy like this where it allows us to collect some revenue. We collect this money no matter what. It's ours in our pocket right away, no matter what. The worst case scenario, stock drops below $34. We buy Canadian Utilities, a stock we wanted to own anyways. Our break even would amount to $33.65. So below $33.65, then we're behind the 8 ball. We've lost a little bit of money relative to what we're going to put down. So we're going to put down the $34. We collected $111 in revenue. So if the stock drops below $33.65, we're into the negatives. However, it's a stock we wanted to own anyways, and a break even of $33.65 is a lot better than our break even of $35.31 right now. So that means we're basically getting almost 5% from the current market price before we're into losing money. So this is a much better option than just going out and buying the stock today, and who knows what happens tomorrow. It could be down and we could already be in the red. Best case scenario in our view is stock closes above $34 on August 21st. We collect this premium. It's ours. It goes in our pocket. We didn't have to put any money down. And now we can write another put the next month. We can just buy Canadian Utilities and have this extra $111 to go towards that purchase. Or we can just forget about it and move on to another trade. So this type of strategy, there is still a downside. If the stock plummets, you're still going to have a loss or be in a negative position. As with any strategy, there is negative downside risk. However, it's much less than if we just bought the stock in the open market. So that's the advantage to this type of trade. These are types of trades that we use often, and we think for a lot of retail investors, this should be a way that you ease into stocks without just jumping in the market, possibly hitting it at a high, especially as it is right now. Valuations are getting a bit high, and you wouldn't want to just jump in and throw all your money at a bunch of stocks, and then suddenly the market drops and you're in a lot of negative positions. At least this way, you're collecting some revenue, you're collecting some premiums, and then you're getting the stocks, if the market does drop, at a cheaper price. So if you want more information, as I mentioned before, please follow us on Day Trade Canada on Twitter. We have daily updates, upgrades, downgrades, news, all kinds of different little tidbits there. And also we have our website that we're constantly updating daily. We've got our investment information on everything you need to know market-wise. And if you need any more information, schedule a consultation. Contact us if you would like, and we'd be happy to help. This is what we do. This is what we enjoy, is helping people be more confident and more knowledgeable in their investing.